Hey guys, Griffin here. Today I'm going to tell you how if you were going to gamble your money away like a Wall Street bet degen, then you should do that in your Roth IRA account. And the reason why might surprise you, but realistically, this makes a lot of sense if you're a young person like myself. And now none of this is going to be financial advice because I don't know your specific scenario and your life goals and situation that you find yourself in. But what I'm going to tell you about is something that I personally do, and hopefully this can give you some insight into maybe some new strategies that you could check out. So primarily the reason that you should gamble in your Roth IRA, if you're going to do it anywhere, is that you don't have to pay capital gains on any of that. So the 40% capital gains tax on short-term capital gains will not apply to you if you use a Roth IRA because you've already paid taxes on the money that actually goes into it. And so you can only contribute up to $6,000 a year in the United States, but what you can do is if you have this money and you were only going to put in that much a year anyway, you can just take that money, or at least a portion of it, and use it for options trades or any sort of derivatives trading that you would like to do that has more risk than you would typically anticipate for something like a retirement account. Now, typically what you associate with a retirement account is like large scale funds and ETFs, more stable, secure assets, so that when you retire at the age of 60 or 65, you can take those funds out tax-free and have a very stable source of income for your later years of life. And so every year you can contribute up to $6,000 in order to accomplish that. And typically when you set up a Roth IRA, they will allow you to set a bracket of funds that you can contribute into each time you contribute, so that way you don't miss out on any particular gains and interest. And so what I like to do personally is do none of that. I don't usually enjoy putting my funds into ETFs. I don't enjoy putting my funds into allocated brackets that pick up particular parts of the market. I don't put my money into the Vanguard Total Market Index either. While those are typically very solid strategies that you can use if you are not interested in actively learning and participating in the market, typically what I enjoy doing is actively managing my funds and participating in a way that tends to make me money. Now, it also exposes me to a lot of risk. And so if you're a risk-averse person, this may not be the correct choice for you. And especially if you are later on in life and you won't have time to recruit these funds that you've lost through essentially risky trades, then it may not make sense at all for you to do this. If you are later on in life and you haven't contributed a whole lot of money to your IRA, I would definitely not do what I'm recommending here. The only way that I would say that you should gamble with this kind of money is if it's a small portion of your Roth IRA. So I would recommend, somewhere in the range of 10% if you were wanting to try this. But again, not financial advice because I don't know your specific situation and I'm not qualified. This is just what I do. So I take about 10 to 20% of my Roth IRA and put it into riskier trades that I anticipate to gain extra capital accruement in order to try and get an edge. Because if you can only put in $6,000 a year, you're kind of capped at what you can realistically expect to achieve. Now, there have been people who have gamed the system, like Peter Thiel, who have made billions of dollars in their Roth IRA through some interesting tricks, mainly just, being an insider at PayPal. But realistically, it's possible for you to earn a decent amount of extra on your Roth IRA through trading options and derivatives. Now, obviously, you expose yourself to a lot of risk. And since you can only contribute a max amount of 6,000, that means that you can't necessarily shore up that risk, right? Like you can't have a capital infusion in order to counteract any bad trades that you've made in the year. So it's especially important that you do good ones, which might put the pressure on a little bit. So if you're not an experienced trader, you might want to practice paper trading or even using another brokerage in order to accomplish this. But if you were thinking that you were going to do some Robinhood style YOLO options trades on your accounts, you might want to consider doing that in your Roth IRA, just because if you do actually hit it big and you make, say, 1,000% on a trade and you go to cash out, you will get taxed for up to 40% of that, depending on your income bracket. And so by doing this in your Roth IRA, you're making sure that you don't pay taxes on that portion of your income when you go to sell a derivative. And that can be really powerful. And so if you do get it right, then you have a really powerful way to avoid paying those capital gains taxes and accrue money for your retirement account that you wouldn't have otherwise been able to. And you in 30 to 50 years will thank yourself, trust me. So the only reason I would suggest doing that is if you're already committed to gambling that money, you're committed to using a small portion of your IRA, and you have self-control, and you have a Roth IRA. If you don't have a Roth IRA, I would highly consider opening one. I think the taxes are probably only going up from here. It seems like with the rate of money printing and the way that the government is currently going, they will need to finance these high rates that they're providing investors right now with the bond markets at 4.5%. So in order to recoup these losses, taxes are going to have to go up, or they're going to have to print more money, right? And so in order to avoid inflation, hopefully they're going to raise taxes. Well, I guess not hopefully for us, but hopefully for them, they're going to raise more taxes, and we can keep this gravy train going a little bit longer, right? So ideally, you're going to want to have some tax-free money that you can rely on as you get to retirement, because it's looking more and more clear that your retirement through Medicare is not going to be guaranteed, and that there probably won't be enough funds in the government to fund retirement programs going forward. And so making sure that you look out for yourself is very key. And so if you are able to accrue a large nest egg in your Roth IRA, that can hugely benefit you. Now, on the flip side, if you are to lose this money that you're gambling on in your Roth IRA, which is highly likely if you are actually gambling it, hopefully you're doing a little bit more concise trades in order to guarantee some alpha here. But let's say you lose some of the money that you have allocated to your Roth IRA. Well, hopefully you're young and you can continue putting in the maximum amount every year into your Roth IRA. And realistically, while you could have made more had you not lost that money, in the long term, if you continue to generate more alpha and you are a profitable trader, then you will come out leaps and bounds ahead. And even if you are not a profitable trader, let's say you're 1% less profitable than you would have been had you have just kept your money in, which is potentially likely, then you're still going to be very well off in the next 30-year time period because of the average appreciation of the stock market. And so you can expect that no matter what, as long as you don't gamble the entire sum of your Roth IRA, as long as you gamble a small portion of it, that you're going to do well. And so if you can take out that money tax-free and ensure that you're going to do well in the future, no matter what happens, by putting the rest of it into safer assets, be it funds or individual stocks that you like, or the total index, then you can really set yourself up for success in the future. And that's what we're looking to do here on this channel, is to show and guide us all through the path to success in these coming times, because I think it's going to be more and more difficult to accrue capital, at least in the next 5 years, than it has been in a very long time. And so if you can figure out ways to get alpha and not have to pay an exorbitant fee on it, you're going to come out miles ahead of the competition. All right, That's it for today. If you've enjoyed this video, please leave a like or a comment below and check out my blog in the description below. Thank you very much, and I hope you have a great day.